Good morning. My name is Nen Nankomo, and I am the managing partner of Atundi Ventures and an advisor at Degame Digital Growth Africa. I'm really excited to be here to kick off this discussion with two other African female investors to talk a little bit about how diversity-led investing is not just a moral or a right thing, but really is a commercial imperative and makes for better opportunities and returns. I have with me two ladies in the opposite of a mantle, Muthoni Wachira, who is the CIO of Unconventional Capital, and Maya Horgan Famodu, who is the managing director at Ingressive. Welcome.
Thank you.
Well, ladies, before we kick in or get into the topic, I wondered if you could introduce yourselves to our audience and give sort of a brief bio of who you are and what you do. Who wants to go first?
Happy to go first.
Thanks, Maya.
My name is Maya. I am the founder of Ingressive Advisory, which was our initial company, started in 2014. It's worked with over 50 firms, assisting them to enter and operate across sub-Saharan Africa. In 2017, we then launched Ingressive Capital, which is now a $10.2 million early stage VC that has had our first exit, woohoo. And this year in 2020, we launched Ingressive for Good, which is a nonprofit that provides micro scholarships, technical skills development, and talent placement for African youth. So we sponsor students' computer science degrees, we buy them laptops and data, and we sponsor those youths who want to learn technology. We sponsor them to take Coursera courses, Code Academy courses across the board, and then their technical training at reputable organizations. So yeah, that's us. I'm happy to be here and excited to see this whamel. If an all male one is a manel, is this a wannel?
Exactly. It's great. Look, Maya, we will definitely come back to you to talk a little bit about this exit, because it's a fantastic marker of development for the ecosystem, but wanted to switch gears and head over to Muthoni. Good morning. Tell us a little bit about yourself.
Hello, everyone. So my name is Muthoni Wachira. I am the Chief Investment Officer for Unconventional Capital, a fund that's investing across sub-Saharan Africa, looking to use technology and behavioral science to remove bias in early stage investing. So with a key focus on local founders. Prior to that, I launched Hummingbird Impact, a fund whose strategy was to invest with a gender and racial lens across East and West Africa. I have a background in finance. I've worked in investment banking. I've been a founder in a microfinance firm. So I'm really excited to be here and contribute to this conversation.
Thank you very much, Muthoni. It may not be news to us, but maybe to some of the people listening, that firms that have more diverse teams have better financial returns. Firms that have or female portfolio managers or diverse female management teams tend to have better results than all male ones. But on the other hand, we see data from the ecosystem that suggests that female founders have much less runway than their male counterparts. And this is data from the US, and females of color have even less runway than their majority peers. So, you guys may know this kinds of statistics, that things are more difficult for founders of color, for women, but yet the performance is greater. How are your respective investment mandates looking to sort of bridge the gap?
Yeah, so we don't have per se a mandate to invest in female founders. We do have a mandate to invest in the top technology companies across the continent. in our target geographies. And what I found, it's not that we are a women-focused fund, but 33% of our portfolio companies are female-founded and co-founded. And so what I found is that, like you were saying with the data that that sort of Harvard studies, MIT studies, the first round capital studies showing that teams that include, diverse managers and also at least one female founder or equity holding decision maker produce significantly higher returns than their all male or culturally homogenous counterparts. And as such, it is part of our investment strategy to look for teams that have proven to produce higher IRR, which do increase diverse gender, diverse cultural, et cetera, et cetera. And I've found, though it's not our strategy to seek out and invest in women-founded companies per se, that by having someone who is of the demographic or the character that you're looking to invest in, or if you want to include diversity, ensuring that you have people who are diverse on your team. So because of the fact that 50% of our full team, our executive team and main team are female, it happens to be that the people I'm mentoring, the people that I work with, the opportunities that I see are increasingly female because I look like the people that we then do invest in. And so I think it's just a testament to the importance of ensuring that the core team that's doing the actual investing and sourcing the opportunities looks like and has direct access to organically to the populations that they hope to invest in.
Highlighting that, Muthoni, it sounds like your firm has a slightly different mandate with respect to diversity. Can you talk a little bit about your firm's approach to investing in, diverse and female-founded businesses?
Absolutely. First, I want to agree with Maya that representation matters, and representation at the decision-making level. So if your organization's decisions are made at IC level, then representation at that level, but also in the investment team is really critical because then you get access to that network. The founders feel more comfortable approaching you, and that translates to how your portfolio ultimately looks. At Unconventional Capital, we do have a mandate to invest in local founders across the continent. We do so by using a very data-driven approach. So all our due diligence is performed remotely. We have standardized questions and tests. We've developed a product that is suitable for diverse founders. It's pegged to revenue and backed by equity. So it's an innovative product that allows us to have access to a larger pool of entrepreneurs who don't necessarily have a hockey stick sort of growth trajectory. And so I truly believe that if you're going to go, if you're seeking outsized returns, your strategy has to have inclusion as an intentional mandate, and you have to design diversity into it. Prior to that, I've also had experience in just using the 2X challenge criteria really to develop a strategy and an approach where we're not only looking to have women represented in our portfolio and in our process, but also local founders, and using a framework like that, something that's a SMART goal, keeps your organization accountable, keeps your team accountable, and the results obviously trickle downstream in your portfolio performance.
Muthoni, for those who may not know, can you talk a little bit about what the 2X challenge framework is?
Absolutely. So the 2X challenge set out just over 2 years ago to deploy $3 billion in gender smart investments. And they created a criteria that has 4 verticals. One is ownership. So they called it entrepreneurship. So that what's the ownership structure of the business that you're investing in? What's the leadership structure? What's your employment? What does your employment look like when it comes to proportion of women to men, for example, and what do your beneficiaries look like? With the 2X challenge criteria, an investment was considered gender smart if it met one of those 4. And so I think it's a good start criteria to use. They had a great success with going exceeding their 3 billion target over the 2 years. How we used it was to say, look, on the same basis of ownership, of employment, of leadership, and of beneficiary, what thresholds do we want to hold ourselves accountable to as a team? So what thresholds we want to hold ourselves accountable to when we're looking at pipeline, and similarly when it comes to the policies that we deploy.
Thank you very much. I want to go back to something that Maya, you mentioned. You talked a lot about representation and the impact that has, the sort of representation of the core team and the impact that has on your pipeline. Have you and the team spent time sort of trying to quantify the impact on your pipeline? And then a further question is, you mentioned sort of mentoring. Are there any behavioral or are there any other parts of your investing process that helps you better screen in or screen out, these diverse and or female founders?
I'm not exactly sure I know what you mean by behavioral criteria. Can you a little bit clarify that second question?
Sure. I think what I am trying to ask is if in seeing this broader, more diverse pipeline, do you notice anything about how those founders present themselves to you and your team? And is there anything in sort of your engagement, your process, that helps you unearth the talented ones?
Yeah. So to answer your first question about our assessment and tracking of the metrics, we track revenue, customer growth from the point of investment and most updated. And for some of our companies, we do track their employee growth. Aside from that, as I mentioned, 33% of our companies have female co-founders. 100% of them have Black equity owners, and 100% of them have indigenous founders, which we believe is a strategy as well. So on that note, we are not an impact fund. We are a strictly for-profit venture capital fund, but it happens that both that profit does align with impact in many ways, in particularly, I guess, sort of foundational or subsistence tech actually does have the highest retention, as it makes sense, and it is aligned with our ethics and our values as investors at the firm. So that's that on the impact side and the tracking side, not broadly like SDGs or anything like that, but we do track the number of female founders, indigenous, Black, and the employees or the people employed through our initiatives. And then as far as what we look out for, again, I believe in entirely equitable investing and business operations, and even looking at myself, I'm an investor who happens to be a woman, and I don't lead with, I don't necessarily see a benefit in leading with sourcing for or creating a distinction amongst female or other sort of, I guess, minority qualifications, and we try to just focus on making the platform as equitable as possible for all types of potential founders. And so there's not, I wouldn't say that I'm looking for something different in a female founder than I'm looking for in a male founder or an indigenous versus an international founder starting a business. We of course vet for character because we are pre-seed and seed stage investors. So we're looking for, we're betting on the founding team. And of course, those are just general things like how long have the team members known each other? Do they have previous experience in this space? Do any of them have real practical experience building products or engaging with the target demographic, which typically aligns with them being an indigenous founder? And And of course, we look for integrity, humility, their ability to respond to and take feedback, their ability to give bad news, all these things. And I have a whole list of them as well. But there are specifics around character, but I wouldn't say, and I don't think it would be beneficial for us to focus on a distinction between different types, or whether it be gender or cultural or nationalistic differences.
Maya, thank you very much for that response. It happens to be aligned with my thinking. I guess the counter question I would ask then is, why do you think so many VCs don't have the kind of gender, indigenous founder, the type of results that your portfolio does in terms of the diversity? What's different? I think that's more the question, is what's different about your selection and screening process that gets, these founders invested in?
Well, I would hope that venture capital firms focusing on the continent have a lot of Africans that they're investing in. I can't say that I've looked at researched the peers of all of my, or the portfolio companies of all of my peer funds, but I would hope that as investors focusing on the African market, that they do in fact have Africans as founders.
Maya, I'm going to make a joke with you. Is that I just spoke with a potential pipeline company that was funded before in a B2C business with local with international VCs, and there was not a single woman or indigenous African in the C-suite.
Yeah, that's and nor were there any equity holders. Like on the cap table, there were no indigenous.
Zero.
Wow. Well, that sounds like, just off the bat, because fortunately, I guess you could call it fortunately. Well, it happens that we our strong beliefs about what is required for success in the ecosystem is local access and local connections, as well as an intimate understanding of a target demographic. And those things I have not seen an example where it's not required to have at least one indigenous equity holder in the business, and thus decision maker who fits that criteria. So it happens to be that our diligence model and our vetting model, which is aligned or comes from our sort of research in how the ecosystem has developed thus far, the success and liquidity events that we've realized thus far, what the profile of the founders have looked like. And yeah, that's interesting. And then it also goes into the value of the firm. With us, we are, our sort of, I don't want to say passive initiative, but something that's very, very important to me is to ensure that there are indigenous, or that we are promoting wealth and equity ownership for Africans or for people, indigenous people of the continent. And as such, our strategies also align with that belief. So I would say it really boils down to the diligence metrics and ensuring that those align with what may produce diverse candidates.
Muthoni, you highlighted a behavioral science, something about your process that hopefully will source or screen in more diverse candidates. Can you speak a little bit about how your firm is aligned with this and how it's using data and or the process to accelerate those goals?
Absolutely. So we're just at the very early stage. This is pre-seed and seed as well. And we believe that for the reason a business that fails or succeeds at that level is entrepreneurial capacity. So we want to measure the resilience of the entrepreneur. We want to measure the integrity of the entrepreneur. We want to measure their background. We want to measure their responsiveness. So we have standardized tests that the entrepreneurs go through that measure their behavior and their characteristics. And that's how we determine whether an entrepreneur has the characteristics that would make for a successful business person. And that's the core thesis of what we do at Unconventional Capital is we're trying to identify entrepreneurial capacity and back entrepreneurial capacity. We also strongly believe that only people who have lived experience in their ecosystem and have a close understanding of the problem that they're solving for will actually do so profitably and sustainably. And just looking at how we have a call for people to join our pipeline right now. 80% of applicants are actually local founders, which is impressive compared to if you look at the portfolio companies, especially for East Africa. VCs at this stage have about 6% local founder representation in their portfolio. So this is like the polar opposite, and it also just begs the question, why is that the case? And I personally believe it comes from, the construct of the team, the thesis with which you're deploying capital, and the accessibility that founders have to you. And I think a simple act is having an application form that's accessible online lowers that barrier to entry for local founders.
Thank you very much, Muthoni. I think if you have been following the VC ecosystem, across the continent, we've heard this narrative time and time again in East Africa, especially versus West Africa, around, local founders, a perception that local founders are being squeezed, quote unquote, out of funding opportunities. And it sounds like some pretty simple measures around access to funding can play a role in sort of remedying this. Are there any other initiatives that you have seen come out of the ecosystem that are encouraging more indigenous founders to participate or in entrepreneurship?
Is that directed to me? Sorry.
Yeah, it was. Sorry.
So I think I haven't seen many, to be honest, in the ecosystem that are bearing when it comes to representation. I think having more women, and I think Maya is a testament to this, having more women in decision-making positions influences how decisions are made and who actually gets through the pipeline. I think I'm also consulting with Safaricom SPAC Fund as their fund manager. This is their second fund. It's a $5 million fund looking at late seed and early growth stage startups across sub-Saharan Africa. And I think having organizations such as Safaricom, so local organizations set up a venture fund, is stimulating the ecosystem and allowing funding and wealth creation to go to local founders in that space.
Thank you very much. Super helpful. I wanted to, shift directions because I think, one of the most important things we can do in building the ecosystem is show that your approach to investing, the lens through which you look at opportunities and select founders and businesses and teams to back is track record and success. I think, quite prominently earlier this week, there was an announcement that Stripe was going to buy or invest further in a Nigerian business called Paystack. If you haven't heard of this, Maya was one of the company's earliest investors. And I wondered, Maya, could you talk a little bit about what the deal does for the ecosystem and how it sort of validates your approach to selecting the best founders and the most diverse founders?
Yeah. And I actually just wanted to add a little bit to the past conversation about how to think about if a firm's intention is to invest in diverse companies or African businesses, how to go about that. And I realize also probably just including West Africa in your investment mandate, or like in your target geographies, or having like a scout or somebody on ground in Nigeria, because those really, if you look at the places that are nicer and easier to live on the continent, there's typically a correlation between like ease of life or like lifestyle, and places where there are those challenges around funding for indigenous versus international founders, and women more so, versus places like Nigeria that's a little bit tougher to live, but as such doesn't have a lot of those Western organizations and individuals tempted, or as much as those that are sort of easier to live in. So I encourage you to have scouts.
Here.
It's rough out here. Nobody wants to live in Nigeria. No,
well, versus Nairobi.
Everyone wants to live in
Versus Nairobi.
We are managing. As curfew is imposed today at 4 p.m. Anyways, I digress. So about Paystack, yeah. I think so. One, I think that, and I said this publicly, that yes, we were one of or this was my first investment in 2017, our first fund investment. And I said it then, and I've told Shola and Ezra this along the way, and I'll say it again now. It's so important that they, not just because they're African founders, not just because, they're Nigerian founders, but because they are people of integrity. Like, they built their business, both of them, they attended Babcock University here in Nigeria. They are domestically educated. They built up their professional experience domestically. They started things from scratch. They had no, connections and getting hooked up with XYZ, blah, blah, blah. And from the beginning, they ran their business efficiently, entirely clean, fair, compliant. If you know Shola, if you know Ezra, they're deeply honest, straightforward people. There's no BS. And I think it's really important that we increasingly, particularly in West Africa, where historically the wealthiest people in the country, those who did benefit, did so because they had family connections, or they were tied politically, or some nepotistic and a non-meritocratic system was sort of culpable or responsible for their success. And I think it's so important and motivating, and this is definitely going to leave lasting impressions in the minds of the next generation of brilliant youths who are deciding, what do I want to do with my life? Where do I want to use my capacity and my skills? And before it'd be like, well, I want to make money, so I should be in government, or I should, make friends with this person, XYZ. And I think this is so liberating for smart people who are here on the continent to know that, like, I don't have to have a blue passport. I don't have to have, a red passport. I don't have to live in the Western world in order to get this skill sets. I don't have to be born into money. I can be anyone and build $1 billion, hundreds of $1 million company that's of the quality to be acquired by one of the top payments companies, or the top whatever company in the world, or IPO. And I think that will be the most, of course, this is going to unlock, additional capital. I'm already having institutional investors reaching out, being like, this is the full circle that they needed to see. First, it's, the technical, or like political stability in their key markets. It's, technical competence. Are there educational institutions that are pumping out real talent? How is the government, or how is the regulatory landscape? All of those questions. Are there, multiple rounds of funding accessible by domestic and international founders? Are people actually able to raise money? What's the VC landscape looking like? And all those questions have been answered. And the one last one was, well, what about liquidity? How are you guys exiting? And, we have those stories and these plans, but to have them come to fruition, not only is it going to impact the founders themselves, as in, you're raising money and Western investors like, great, but your public markets suck. They're totally illiquid. So like, how am I ever going to get my money out? I'm not going to do it. Now you can point to real case studies and see, look, actually what's happening on the continent right now. And that in and of itself is impactful. And also for those who are funding, those African investors, of course, there was another piece about how there are less, like, I think, 10% of cap tables of companies that have raised their Series B or Series A and beyond are indigenous investors. And this actually, interestingly enough, will create the ripple effect, because the majority of my capital was from the Western world when I started this out. And this allows for the unlocking of a lot of institutional funds, both abroad and domestically. You know, we were one of the first investors, or first funds to receive backing from the Sovereign Wealth Fund in Nigeria. And this is just another case study as to why they should continue backing VCs and why they should be making direct investments. And that spreads elsewhere as well.
Thank you very much, Maya, for that feedback around the importance of big liquidity events. And, you know, as you said, you know, Shola and Ezra, it couldn't happen to a better set of people, you know, so as you said, people with integrity. I think we are coming towards the end of our panel, and, you know, your remarks, Maya, kind of, you know, concluded or gave an example of sort of how you approach diversity, equity, wealth ownership in sort of your investing thesis. Muthoni, do you want, can you sum up sort of how your approach leads to better results, you know, as we sort of conclude and wrap up our session? I think, Muthoni, you might be on mute.
Oh, I am muted, sorry. Two thoughts. Under Unconventional Capital, we're trying to break, there's been a narrative that there's little pipeline of locally owned businesses that can scale. And I think here we want to bust that bubble and say, look, there's not only, in a continent where 99% of the population is Black, it's not justifiable that 10%, that only 10% goes to local founders, and like the reverse is the more eyebrow raising sort of position. So we want to prove that there is a large pipeline of investable businesses at the early stage. Not only that can we identify them, but we can invest in them and we can exit. So that's the premise under Unconventional Capital, and that's what we're trying to prove. We're only a 2-year-old organization, so we haven't exited yet, but we've seen a great performance from our portfolio. Our first investment round was this year. We invested in 23 companies, and already the performance, all of them have, you know, are still standing even through COVID. And these are organizations where we didn't actually have any physical interaction, like we didn't go out and do any physical due diligence. So not only proving that virtual due diligence works, but you can also identify companies that are resilient and will weather the storms that come. I think the second is when I look at Spark Fund, the challenge of exiting, and especially for early stage investors, has been around for a long time. So how do you achieve liquidity events? And already from the pipeline and what we're seeing secondary sales becoming quite common. So later stage investors offering liquidity events for early stage investors. So both seed and angel investors. And I think those stories need to be told because they catalyze investments and give credence to investors who want to come in early, that there is liquidity. They don't have to wait 10, 15 years, same as late stage investors, because I think when that cycle is fluid, the whole ecosystem benefits because investors are coming at different stages to add different kinds of value. And the more we offer liquidity for people at different stages, I think the more we'll see a vibrant ecosystem. So those were my two thoughts.
Muthoni, thank you very much for your feedback. I'm really excited. It sounds like you guys are on track to hopefully see the kind of full life cycle investment that Maya has just seen out of one of her early stage businesses. It looks like we are ready to go to the next session, unless I see that we have time for, yep, it looks like we're ready to go to the next session. So I'll thank Maya in absentia and thank you right now for spending some time with us and talking to the ecosystem about you know, diversity-led investments and, you know, the commercial imperative of changing how we deploy across the continent. Thank you very much. And thanks to the festival for having us. Bye-bye.